Today's theme is buy this dip. Wow, Pete must really be bullish. It's depressing. When I go onto YouTube, I see so much gloom and doom out there. The market's going to crash. Sell your stocks now. The credit crisis looming. People don't have jobs. I don't know if this is sensationalism and an effort to get you to click on the videos, but whatever it is, there's a lot of bearish sentiment out there right now. And if I look at the headlines and the economic releases, yeah, they paint a pretty gloomy picture, but I've got some good news for you. I have some reasons to be bullish right now. I'm going to get into that in just a moment. If you find this content to be helpful to you, please give it a thumbs up, subscribe to my YouTube channel. That's how I'm going to be able to reach more traders, and that ultimately is all I'm trying to do. I'm trying to educate as many people as I possibly can, and hopefully you've benefited from some of my recent picks. My last pick was QS, and I had mentioned selling the October 17 $10 puts and getting 35 cents for those. The video came out right here. I love this rally late into the week, but I wanted to distance myself from the action because this is a volatile stock. I'm selling that high option implied volatility. Monday morning, you're able to get 35 cents for those puts. You're able to get even more for those yesterday when the market dipped. And lo and behold, today, the stock is even a little bit lower than it was on Monday, and those puts are even cheaper, meaning that trade is working out for us. I believe they were 20 cents bid, offered at 25 cents. I'm going to be looking for a similar play today. Got a couple of picks lined up for you. So let's get into our market analysis, and I'll explain exactly why I feel this dip is a buy. So first of all, you can take all the fundamental news you want and you can throw it right out the window because the market is often not rational. And that's why we focus on technical analysis. Now, I saw a lot of bad data points coming in earlier this summer. We'd had a big market sell-off that lasted into April. So yeah, there was some pending news. We had tariffs, we had uncertainty with trade deals, we had weak economic reports coming in. To be fair, in August, if the market was going to drop, it would have dropped in August. That's when we had that really hot PPI number, 0.9%. Whoa, out of nowhere. That's when we had that really dismal jobs report, and they had lopped 150,000 jobs off of the May and June numbers. So we had a lot of bearish economic news, and the Fed at that point was in recess, and they were still fairly hawkish, fairly balanced, I should say. They were weighing unemployment with inflation. We don't know. So there was enough uncertainty in August for the market to decline, and that is a period of seasonal weakness. And that seasonal weakness lasts about till midpoint in October, really the last weekend in October. And then we shift into a bullish seasonality pattern with a year-end rally. That has a little something to do with my bullishness, but not completely. So if we take a look at the technicals, it's really pretty easy. Again, we're going to throw all the fundamentals out the window. We do have some major economic releases this week. We've got ISM Manufacturing, ISM Services, ADP, JOLTS, Challenger Grain, Christmas. We have the jobs report on Friday. They haven't moved the needle. Even if those reports come out weak, I think the focus is going to be on, hey, that gives the Fed room to ease twice more this year. If the numbers come out good, it's going to be, hey, that's awesome. The economy's not going to go into a recession. So either way you slice it and dice it, this market has not done anything but float higher. Asset managers who have been waiting on the sidelines to buy a dip are still on the sidelines because they know that this is a seasonally weak period. So they're waiting for that dip and waiting for that dip. The closer we get to the end of October, the more anxious they're going to be. They don't want to miss a year-end rally. and that's going to preserve the bid. What about the budget? What about a government shutdown? Is that going to matter? That's not going to matter because politicians always wait till the last second and then they get a deal done. Yes, we could have a government shutdown, but it's probably not going to last more than a week or two, and then the market will be right back on track. So what I'm really paying attention to is what the technicals are telling me, and price action drives all of our decision making. So what have we seen in the last 6 months? The dips have been brief and shallow, and the recoveries have been swift, and the market's been able to make relative new highs off of each one of those dips. And if you look at periods where the market gets overextended, it gets well above the EMA 8, that's when we can expect these dips. That's when we can expect price consolidation because the market has gotten ahead of itself. So back here, you can see we're well above the EMA 8. Whoop, there's a dip. Test the major moving averages and fly right off of it. Okay, now we make a new all-time high. Market distances itself from the EMA 8. All right, there's another pullback. Another bounce. Market gets well above the EMA 8. We compress. Okay, market's able to hold those gains, and now it grinds higher. Gets a little bit above that EMA 8. Whoop, there we go. There's another dip. There's another buying opportunity. There's an extension above the EMA 8. There's another dip below it. There's our buying opportunity. There's another dip below it. There's our buying opportunity. We get overextended above the EMA 8. What should we expect? There is another dip and another buying opportunity. So this is the prevailing pattern that we're currently seeing in the market. There's nothing that suggests that the rug is going to get pulled out from under us. You're going to typically have some warning signs when the selling pressure starts to build. Well, what do those look like? Well, we start to see deeper dips that last longer. Haven't seen anything remotely close to that. We at very least see a down day with some decent follow through. Haven't seen any of that. Haven't barely seen 2 red candles in a row. We've got 2 right here, but you're hard pressed to find any others. That means buyers are in there snapping these dips up. That's not bearish. That's bullish. So there's no reason to be bearish right now. What else might we see? We might see heavy late day selling with a close on the low of the day and then follow through the next day. I'm not seeing that. Not even remotely. So let's take a look at what we saw Thursday, the one down day that we had, and see if there are any clues in the price action there. So this is what happened on Thursday. The market probes for support. All right, here we go. 3 stacked red candles. Beautiful. Maybe this is the day when we keep selling off. No. Instantly, the market bounced right into the gap. That's not going to happen if sellers are in control. That's not going to happen if there's a lot of risk off. Okay, well, here we go. Now for sure. Now we're going to test the low of the day. This is the one that gains traction. First of all, this bounce was too tall and it lasted too long. If sellers are aggressive, they are not going to wait this long to replenish their asks and to start smashing bids. So now we test that low and we fly right off of it. Now this is consistent with what we've seen on all of those other dips below the EMA 8. We get a similar day just like this where we fall below it. Sellers can't get anything going. We test it again. Sellers can't get anything going. The next day, we usually are going to probe for support again. We did today. And then look where we closed today. Market rallied well off the lows. So this is going to get buyers interested. For sure, bullish speculators are going to be paying attention to this and going, hey, the coast is clear. I have been waiting for a pullback to EMA 8, and I want to see that support. And once I have that, I'm going to buy, because that's what they did here. That's what they did here. It's what they did here. It's what they did here. That's what we're going to do. So we're going to find some stocks. If you're a little squeamish about buying here because the market's run up so far, number one, I'm going to show you a strategy that allows us to distance ourselves from the action, and that's what we're going to be doing. Number two, you can trade smaller size, so you don't have to go nuts in here. So there are a couple of different ways to approach it, but you should be long. So I'm going to take a look at a couple of stocks. You know, I like selling out of the money premium on strong stocks. And so QS is one that's shown some recent strength, and it's had extreme option implied volatilities. If I can sell options that expire October 17th and I can generate somewhere between a 7 and 10% return, I'm all over it, especially if I can distance myself from the action. And in many of these cases, I'm 20% out of the money. Great. Bring it on. While the market is doing a whole lot of nothing and kind of floating higher and looking like it's going to continue to do the same into year end, this strategy is going to generate really nice income for me. So one of the stocks that I like is BE. I've highlighted that one a lot this year, and I like the fact that it pulled back and it found support today, and now it's into this M5 gap. Well, let's take a look at the daily chart. I did sell some puts on this earlier today, and I sold the puts so that I would be long at AVWAB-E, and that was around the $57 level. I sold the October 17th $59 puts for $2.40. So I'm going to be net long the stock somewhere around the 56.60 level. That's right down on this AVWAP level. I like this stock. I want to buy this stock. I hope I'm assigned. It's going to generate somewhere around a 7.5%, 8% return if I put up half of the strike price in margin, and that is how I'm basing my calculation. So yes, I like that. $2.40 divided by the $29 I have to put up in reserve. Yeah, it's going to generate a decent return for me in the course of 3 weeks. So what do I like about BE? I like this nice, steady price action. Do you see how tight and orderly this is? Well, what happened was the stock went parabolic, okay? So you can see how it distances itself from the EMA 8. Well, once you have this type of slope to the move, that's going to attract profit takers. Guys that bought the stock in here are going to look at it up here and go, you know, in the course of a few weeks, those are pretty nice gains. Long-term buyers don't like you riding their coattails. Surprise. So what they'll do is they'll stop bidding. They're not going to buy the stock up here when it goes parabolic. And what they will do is they know that they can shake you out. So they are going to start selling and taking profits on some of their position just to flush you out. And most of the time, it works. And so you get this nice little pullback. The stock starts to find support, and then they start to buy when you're selling. And then the stock resumes its climb higher. So I want to see a nice gradual climb higher. I don't want the stock to get overextended. When it does get overextended, if you are long stocks that go parabolic like this and they get overextended, take some gains. Do the same thing that they're doing, and then look to re-enter. Stocks are not typically going to be rocket ships that continue to race higher. So you're going to get these pullbacks. These are going to be opportunities for you to reload. So I like selling BE puts. The stock finished a little bit higher today, so I don't think you're going to be able to get $2.40 for those puts You might be able to get $2 for them. I'd like to get a little bit more than that, so let's go and see where they closed today. Let's see, September 17th, it was a 59s, and those closed around $2. So yeah, they're already moving my way. I would say if you get a pullback in the market or the stock and you're able to get $2.30, $2.40 for those, and if you want to be long stock at AVWAP-E, the same price that all of these buyers are long is AVWAP-E, then that's a good strategy for you to use. Decent option implied volatility. And look, the stock can fall from $70.35, and my net price is going to be all the way down to, say, $56. That's almost a $15 move that I can weather. It's almost a 20% move that the stock has to make, and I'm still okay. I love that trade. So I can go in and take a look at a couple of others here. I'm going to go in. Well, look, Tesla's on the top of the list here. You know I've liked Tesla. I put this one out there a few weeks ago, and I still like Tesla. It had gotten well above the EMA 8. It shot higher. I was hoping for a little bit of a pullback right off of that breakout, just a test that Monday to see if it would come in. It never did. In fact, the stock shot higher. So right in here was the candle that I was hoping Tesla would retrace just a little bit on Monday, or maybe it was Tuesday. It never gave us the chance, and then it shot instantly higher. Dang, because that would have been a really nice spread. Now, I have been highlighting it and just mentioning it in recent videos. And what we want to see when we have a move like this, again, look at how far above EMA 8 is. So there are one of two things that can happen when the stock does this. Number one is that it can pull back to the EMA 8. Might pull back even farther. If it's all fluff, it's going to pull back instantly. Number two is that the stock treads water. The stock compresses. The EMA 8 catches up to the stock. That's what's happened. Here's what I like about Tesla, and here's why I believe Tesla is going to continue to move higher. If you look, you can see how, yes, this is a compression, but you can also see how the stock is making higher lows. You can also see how it's starting to make some higher highs. So even though this is a fairly tight trading channel, the stock is inching its way higher. What does that mean? That means that buyers are getting more aggressive. All of the sellers who thought that this was just fluff and who were willing profit takers, sell, 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 sell. That supply is being exhausted. And pretty soon, buyers are going to have to get more aggressive if they want to own this stock. So instead of just outright telling you, yes, let's go in and let's buy us some Tesla, after a pretty big run like this, I'd still like to see it compress a little bit, but I'm confident enough right now to put a trade on. And what I would do is I'll take a look at this support level right here. That low comes in at 402.40. So why don't we sell a 402.50 bullish put spread, and let's see what we can get for it. So I'm all the way down here, and I'm going to tell you one other thing that I really like about Tesla in just a second here. Well, why don't I tell you now? How do I know that Tesla's not going to fall apart? It is a newsy stock, and that's another reason for doing a bullish put spread instead of just outright buying the stock. Call options are pretty expensive. Selling put options, that's going to be a decent alternative for us because we can go all the way down to 402. That's about a 10% move that the stock would have to make in the course of the next 3 weeks for us to be in trouble on that bullish put spread. I don't see it happening, and here's why I don't see it happening. So yesterday, we get this nice market drop. In fact, the last 3 days, 3 of the last 4 days. So we've got Tuesday, Wednesday, Thursday, drop, drop, drop. Tuesday, Wednesday, Thursday. Look at this stock. It didn't even budge during market weakness. If they were going to smack this stock down, they would have done it Thursday. Didn't do it. Would have done it Wednesday. Didn't do it. In fact, the stock made a new relative closing high. So this stock wants to go higher. Let's take a look at those put options and let's see what we can get going 3 weeks out. Again, we're going to be keying off of that 402.50 level, and we are going to be selling those put options and buying the $400 put options. So in this particular instance, we've got a $2.50 wide spread. I'm going to go one strike further down to see what we can get. And I want $1 for this spread. So we're going to distance ourselves a little bit more. We're going to go even below this point right here, just a little bit. And we're going to go down to the $400 price level. So we're going to sell the $400 puts. We're going to buy the 395s. We're going to do that for a credit of $1. It's pretty much there right now, splitting the bid ask. So we might need just a slight downtick in this stock Monday morning. You're going to have your orders ready to get that trade off, because if the stock dips temporarily and then runs higher, you're not going to get the trade done. So you've got to have the order working. You got to like the trade almost instantly, because what we do not want to do, this is very important. Let's say 4 days go by, and then the stock falls and you can get your $1 credit. No, we don't want to do it then. We are expecting that the stock has been working its way higher. We are expecting that time premium decay after 4 days is already going to be working in our favor. The only reason we would get that credit at that late date is because the stock has dropped hard. So if you don't get this trade off Monday or Tuesday, no go. We're not doing the trade. And that's how you have to look at bullish put spreads. Like, that premium is here right now. And when you have accelerated time premium decay working in your favor, it's not working in your favor when you're trying to get the trade off. It's only working in your favor once you're in the trade. So you're scrambling, fighting. You got to get that trade done very, very quickly. So focus on trades like this. Distance yourself from the action. There are a number of other stocks that I like as well. I really like selling out of the money puts right now. JOBY. That was another one that I highlighted in Sunday's video. And I think we were selling the $15 puts right down here again at AVWAP-E. I can't recall, but I know that I got the trade done that I highlighted. I got the credit that I wanted. And this is another one of those trades where I'm going to be able to make, say, 8% plus in the course of a few weeks. But back to the market. When we take a look at the technicals, what are the technicals telling us? Are there any big speed bumps coming up? Has the market been worried about anything? No. Dips are brief and shallow. Brief and shallow. Brief and shallow. Brief and shallow. That is bullish. That tells us that buyers are engaged. Forget about the headlines. Forget about the gurus that are out there. Look at the price action. You don't need me to tell you what to do either. Just look at the chart. Follow the technicals. And if by chance we start to see some larger crackdowns, then we have to be more careful. But until we see that, we have to expect that the market is going to continue to move higher because money is coming into the market. So let's say that we get this bullish put spread on and we sell some naked puts and the market does hit a speed bump and we get one of those big drops. Well, first of all, we are distancing ourselves from the action. So we got plenty of cushion, lots of distance so that the stock can move around without us being in danger. We can short some S&P futures, short them intraday, short them as, chances are any kind of big drop will only last a day or two because we haven't seen any major drops. It's going to take some really big news. And like I've told you, market's been able to shoulder all the bad news. Why is a bad jobs report going to shock the market? We've already seen 3 or 4 bad jobs reports. The market's focused on interest rate cuts, so it doesn't really even care. And if the job report comes out good, the market's probably going to like that too. It likes everything right now, so it's oblivious to the fundamental backdrop. And we're getting into a seasonally bullish period, so dips tend to be very brief and shallow during the last few months of the year anyway. So I believe our downside risk is relatively contained right now. We're distancing ourselves from the action. We're taking advantage of high option implied volatilities. And if we have a bad day or two, we can always hedge with the futures, reduce some of our risk in doing so. When the market finds its footing, it finds support, we take the futures position off, make a little bit of money on that, and then the stocks recover and time premium decay whittles away at those positions and they expire worthless. That's the tactic that I would be using right now into year end. Again, please give this video a thumbs up if it's helping you. We will see you Wednesday. I'm going to be doing another educational video this week, and I'm going to be talking about how to buy hot stocks, how to enter hot stocks, how to trade them. And so that'll be the next video. Please watch for it. We'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.